I reiterate, it is a bull market, says Jim Cramer. Well, the Fed came out today and stuck to the script about more rate hikes coming. And as soon as that meeting went about, the market went on a monster rip. You can see Powell is quite confused, and Coco was there too as well. Well, Jim Cramer came out and said, I reiterate, it's a bull market. And then everyone laughed because he literally top ticked it right over here. But what people failed to call out was a follow-up tweet saying, interesting sell-off opportunity. And guess what took place after the market went on a monster move? I tell you what, this market is very, very interesting. We're going to talk about some interesting stuff here on today's Stock Market Brief show. I tell you what, it's so left and right? So it's yin and yang. There's either really bullish or really bearish. There's really hardly in the camp that, hey, we can just chop sideways. But just to give you a good picture of what that might look like, these two, so meet Kevin. People are familiar. This is George Noble. He runs NOPE ETF, which if you really look at this, they're complete opposites of one another, right? You get this move and then you get this move. Okay, so one's going straight up, one's going straight down. And the really one thing that they're trading in here that's, big portion of their portfolio is Tesla. One is long and one is short. And what you see here is you don't see anything, you don't see two-way price action. You see one-way move, all right, one-way move, and we haven't seen any sort of consolidation, any sort of pullback. People are really thinking that this move can actually just continue at this rapid rate of change that it's currently doing. Eventually, it's going to get tested, and then we will know more certain of where the market may head next. Now, if we take a look at the 11 sectors that make up the SP500, energy was up there at the top. We talked about that in yesterday's episode about a possible opportunity there, and it's set up beautifully intraday. This was what the chart looked like, right? So we're coming back into this zone area, and we started moving up higher through that, back up to the year-to-date anchored VWAP. All right, we talked about oil having that bullish not quite piercing pattern, as we discussed how, it would have been nicer to close more through 50% through that body, but it was still bullish nonetheless as it was into an area of support. And we saw that strong move up there too as well. As far as the other sectors go, we have consumer staples, real estate, utilities down there towards the bottom of the list. And those are more, utilities and consumer staples are definitely more defensive sectors. So those ones were rather flat on the day to slightly down. And you could see over here on the left-hand side of the screen, the NASDAQ and then also the NASDAQ 100. Those were the shining stars there, as well as the S&P 100. But the S&P 100, you got to understand, it's taking, the top names there in the NASDAQ 100, okay? So it was a big, heavy tech rally. As you can see, the XLK was up 2.5%. Now that to me is pretty interesting at this point, because we did see the 10-year yield rise, right? So it's interesting to me because typically when you get a rapid rate of change in the 10-year yield, it puts pressure on growth stocks, which we saw yesterday. So it's going to be interesting to see how this resolves itself. Another thing that was interesting was the dollar was only down slightly on the day. Okay, so this could just be consolidation or pullback as we've discussed. And then we might see, tech actually feel the pain if the dollar wants to continue to press upwards, as well as the 10-year yield. That's going to be a big thing to watch moving forward. Now, another thing that I want to call out is just the ridiculous amount of divergences here on this chart. And I wanted to show you that, sometimes these obviously take time. You have a high, lower high. We discussed this, a high to a higher high, and you see price action in the New York Stock Exchange actually currently wedging right here. And it's just been on this upward slope. So if these trend lines start to break, that could cause, potential more movement to the downside here, where we get a move down in the 9-month and we get some further consolidation, pullback. A lot of people think that this means crash. That's not what it means, but you never know. Like if you were just to do a measure move from here to here, it's about, if wherever it breaks, it could take us, potentially 50% down. It could take us to around 14.5, and then the bears celebrate. But then the bulls might look at this as an opportunity to start adding long, okay? Or, it could literally just be in a chop box. Just chop, 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 and so forth. It could continue to rip up higher, but it's going to have to, once again, consolidate at some point or pull back. The NYSE Summation Index right here, NYSE. Guess what? This started to curl itself over, which means what? The parabolic star is going to start catching up to it. I guarantee you, if this starts, I can't guarantee it, but when this starts identifying a change in trend, what I will figure that's going to be taking place is sentiment is going to start shifting a little bit. You're going to start seeing the I told you so's from the bears, and you start, see people get a little bit more bearish, like, oh, we're going to consolidate. And that's when that's probably going to be taking place. But as it stands right now, people, from what I'm seeing, it's just very euphoric. And then bears are wondering why the prices keep going up. They're wondering when it's going to actually drop. The trend is up, people. When you're above an inclining 5-day moving average, the short-term trend, it's up. It is what it is. Tops take time, as we've discussed. S&P 500 right here, still within between 3,900 and 4,200. 4,215 is that upper expected move for the week, is one of the levels that I'll be watching for. I think that's more than capable of hitting. I want to show you Bookmap over here on ES. Now, if you don't know what Bookmap is, Bookmap, it's like peeking behind the curtain almost, right? So it's like taking the blindfold off when trading. All these little dots on the screen show cumulative volume delta. So it shows, if it's green, there's more buyers than sellers. And when it's bigger, there's a lot more buyers, right? It's an excellent way to read level 2 or market depth. This is how I trade intraday. I use this now all the time. But I wanted to call out this level right here. You can see it's 4,200. And one other thing that I noticed here, when Powell started speaking and it came up, you can see all of a sudden we started getting some more red up here, which means we're getting some more orders up at the top, and the market started pushing back down. And as soon as it got down right into this area, take a look what started heating up, that 4090 area down here. And as soon as that started heating up, getting more red, more orders, we started to see a bounce. It tried to come back down. It was a double bottom, right? And then we started pressing up higher. It wasn't up until here where we really saw that start to light back up again at 4,200. So, or more orders started to get there, and that started to push price back down a little bit. So going into tomorrow, a couple of things popped up on my screen after the close today, and you can see here 4210 to around that 4215 marker, which, this is ES, but that lines up fairly close there on the upper weekly expected move there. I think on ES, the upper weekly expected move was 4221. If I remember correctly, I share that with the Patreon group. The other levels that I want to point out are 4195, so 4200, right? You can see the spikes right here, right there. And then towards the downside, look at 4130 over here. That'd be one to watch too as well. Now these can change obviously come market open or even intraday, but those are some levels that will be something that I'll be watching going into tomorrow's trading session. If we take a look at this SPY on the 15-minute time frame, we talked about this trend line right here, and the reason why is because every time we tagged into it, we saw explosive moves from it. And you can see after the Powell started talking, we ripped up higher. We saw this big move to the downside, very choppy, hard to trade price action, came right into this, and look at this explosive move right back up through it. So the reason why I'm calling this out is because I'm starting to think that if this trend line breaks, right, where we discussed last time, it can come down, test the lower expected move. I don't know if it's going to break this week or not, or whatever the case is. At some point, I would imagine it's going to have a test or break again, or try to break again. It might be one to watch, because if we break it, maybe back test, create a lower high, lower low, that could be an opportunity to see some more weakness or consolidation take place. But as it stands now, it's still holding as a level of support. If you take a look here on the 15-minute time frame for SPY, we talked about this potential bear flag, but if it broke out of the upper line, it might pop up higher. It popped up higher, but then it reverted, and then it reverted back up. So incredible price action. We have that shooting star candle, a little bit of a negative divergence here. So we had that high, right? And then we have a high here and a lower high. So we'll see here if that negative divergence plays itself out to consolidate this big rip up towards the closing hour or so of business today. If you take a look at the Qs, still above that inclining 5-day moving average. You can see we did the U-turn today. Boom, on the 5-day moving average, and we started ripping up higher. If you take a look at it on this time with a little bit more data, you can see we have that negative divergence. We had this little pennant pattern, bear pennant pattern, breakout to the upside, retested the upper portion of that channel, came right back down to that 5-day as we just discussed, and right back up to the upper portion of that melt up channel. You can see here with that shooting star candle and that negative divergence. So we'll see here if this is, that bull flag that we kind of discussed, and then it wants to just start ripping up further. But like I said, right, this is a very strong move to the upside, and now we're starting to see it kind of, show a little bit more volatility up in this area. So if the 5-day moving average starts curling, flattening out, and this gets below it, that's where we start to potentially watch out a little bit closer. That's all I got for you, everybody, on today's episode. Hope it helped out. for tomorrow's trading session. See you later.